Anthony Grasso here, bringing you financial news you can use. In this video, I'm going to do a stock analysis on Chewy. We're going to be doing this analysis with the help of my Frenchie sidekick, Batman. Hey, Batman. Hey, buddy. So I'm going to go over a summary of the company, its product offerings, recent headline news, financials, analyst projections, and give it my buy, hold, or sell recommendation on both the short-term and long-term growth investors. And as always, folks, don't forget to smash that like button down below and consider subscribing. Hit that notification bell if you like to hear daily stock reviews and recommendations. So what do you think, Batman? You think you're gonna be a buy on Chewy? Are you gonna be a buy on Chewy? Yeah, well, we're gonna find out. He's heavy, so I'm gonna have to set him down. Okay. So let's get into Chewy right now. He's just hanging out. He's like, why were you holding me? All right, I'm gonna go back down to sleep. All right, so folks, Chewy is an online seller of branded and private label pet food and grooming supplies. The company's brands include a Pet Hub, A&E Cage Company, ABO Gear, a bunch of other brands. The company's product offerings by categories include tablet, chewable tablets, solutions, capsules, injectables, suspension, and ointment. The company offers over 1,600 brands with its operation in 13 locations. The company offers its products and services through its website and mobile applications. So let's go look at some news of the company recently so far right now. In this CNN article, Chewy's competitor Petco is going to be giving Chewy a run for its money, according to the CNN article last month. The 55-year-old pet retailer launched its third IPO in the company history on Thursday, and this time it's taking aim at the fast-growing online rivals like Chewy. The company, now known as Petco Health and Wellness, invested heavily in e-commerce and building veterinary and other on-site services aimed at making it a one-stop shop for pet owners. Now, Chewy is growing much faster, though, than Petco. However, Chewy surged 45% in the third quarter of 2020 as Americans continue to buy pet food and supplies online. Now, Petco, by comparison, reported slower but solid quarterly sales growth of 16.3%. I feel that the market is big enough for both Petco and Chewy to succeed in the future, but Chewy is definitely outgrowing Petco at the moment. Now, another article from Forbes puts an article last month about how Chewy is winning the battle for pet owner loyalty. Now, the retailer is connected with millennials and others by offering a wide selection of products, including prescription medications. Early on, the retailer jumped on the free 2-day delivery bandwagon with the $45 minimum purchase requirement. And how about you? But when I buy food for Batman, I look at, okay, well, I'm going to add a toy onto the order because I'm like, I'm at $45. I just need another $4 before I get the free shipping. So I'm like, okay, Batman, you get a new toy today. So, and that's what I've been doing with that bandwagon as well. Of all the items that set Chewy apart, however, none may be more important than its direct 24/7, 365 days a year customer service operation that empowers employees to go above and beyond for their customers. Examples include sending a customer flowers to congratulate them on a wedding that was mentioned on a call. Another representative sent an unused keyboard from the company's supply closet when a customer mentioned having a broken device. That's kind of neat. But let's go ahead and look at some fundamentals of Chewy right now. So it's currently trading at $108 a share, down about 2.2% today. And it's definitely near its all-time high. And it's definitely had some resistance around the 100, breaking through the $100 share price. So the company has a market capitalization of around $45 billion right now, and it's currently unprofitable with estimated earnings in the past year to be around $7 billion with a negative $155 million in earnings. Now, earnings are forecasted to grow by 90.56% per year, and this stock is kind of overvalued with those forecasted projections. So it's taken in the projections of it's going to maintain a 90% incline over the next couple of years. Now, it's forecasted to have revenues of around $10.51 billion in 2023 with positive earnings of 74. So it's forecasted to be about 2 years before profitability and a break-even point. So it should hit the break-even status in less than 2 years. But that is based upon if that forecasted growth of 90.56% per year will continue. This is definitely considered above average market growth in its segment. Now, the company has stable cash runway. Now, even though it's unprofitable, it has sufficient cash runway for more than 3 years if it maintains its current positive free cash flow level. And Chewy also has sufficient cash runway for more than 3 years due to its free cash flow being positive and growing at 60% per year. Now, but we have to look at Chewy's insiders. They've all been selling shares in the past 3 months, so they're kind of jumping ship right now. So what do the analysts say about this? And let me bring it back here. Now, the analyst consensus is a moderate buy on this. The average Chewy stock price target is $101 over the next 12 months. It's currently trading $108. Now, it has a high estimate of $133 and a low estimate of $75. Now, going over a few of the analyst reports, the Ford Equity Research Report has Chewy currently as a hold rating, and they project that Chewy will perform in line with the market over the next 6 months to 12 months. Now, Ford's hold on Chewy is the result of their systematic analysis on their 3 basic characteristics for earning strength, relative valuation, and recent price movement. Now, the company has managed to produce a neutral trend in earnings per share over the past 5 quarters. Because the company lacks sufficient analyst estimate data right now, they place greater weight on the historical earnings per share trend as the measure of earning strength. Based on an operating earnings yield, the company is overvalued when compared to all of the companies that they cover. Share price changes over the past year indicates that Chewy will perform well, very well over the near term. Now, Credit Suisse, though, raised its price target on Chewy from $104 to $121 over the next 12 months and kept an outperform rating on Chewy. Now, analyst Erin Wilson Wright said she was increasingly confident in the company's long-term growth trajectory and ability to increase margins, and I agree with that sentiment. Now, looking at the valuation analysis, Chewy does seem expensive, though, with the price-to-sales ratio of 6.39 times above the industry norm median of ratio of 2.99 times. Now, although profitable on a gross basis, Chewy has inline profitability in the industry. Its operating and net margins are in line with the industry medians. So my buy, hold, or sell recommendation on Chewy right now, here are my thoughts. Looking at the macroeconomic factors, over the past year, e-commerce sales have surged from 32% to $188 billion last holiday season, which is the equivalent of 2 years of growth. Because of the pandemic, I believe this surge in online sales will favor Chewy in the next 2 years, from 2021 and beyond. It also helps that Chewy belongs to PetSmart. That's the pet superstore chain that acquired it in 2017 for about $3.35 billion. And the analysts said they kind of overpaid for it back then, but they're reaping the benefits of it now. So if you're a pet owner, you might want to follow the famed investor Peter Lynch's advice. Invest in what you know, and if you know and love animals, that means investing in the pet industry. In 2019 alone, the U.S. household spent $36 billion on treats, $19 billion on supplies and medicine, $29 billion on veterinarian care, and $10.3 billion on boarding, grooming, insurance, training, and pet sitting services. So one question I have to examine is, for this stock, after the coronavirus pandemic, will people decide to stay on buying online instead of going to the brick and mortar pet stores? And my prediction is, just like how Amazon has forever changed people's buying habits, so will Chewy in the pet products space. So I am a bull on the forecasted future projections of this company of 90% increased growth. But to bring this back down to earth, though, with a note of caution, this stock is currently overvalued at the current stock price. So there will be some downside risk, volatility risk in the short term. And if they miss any of their projected revenue and earnings projections, it will pull this stock back down close to the $75 to $85 price point right now. So I do see some potential of cooling off in this stock in the near term. Now, Chewy's huge gain in the last 3 months alone implies the risk-reward profile is no longer favorable, despite ample opportunity to grow in the online pet category. But even though there will be some downside risk volatility in the short term, I believe this is a long-term growth winner. I would buy into this on one of the volatility dips like today and hold for the long term for around the 3 to 5 years to reap the treats. If the company dips even more, I would dollar cost average over the near term. I put a price target in 12 months to be around $115 a share right now. So there is some volatility risk at $108 a share to get into it. So there you have it, folks. And as always, don't forget to smash that like button down below and consider subscribing and hit that notification bell if you like to hear daily stock reviews and recommendations. Until the next stock update video later today, folks. Ciao.